Welcome to TECHi. I'm your narrator. Today, we dive deep into the October 10th, 2025 flash crash in the crypto markets. On Friday, October 10th, 2025, the world cryptocurrency market was hit by one of the strongest crashes in its history. Bitcoin dropped to under $110,000 after U.S. President Donald Trump declared a 100% tariff on Chinese imports. This startling policy move triggered a wave of mass selling in the crypto ecosystem, wiping out over $7 billion in liquidations in just hours. The values of major digital assets, Ethereum, Solana, XRP, Dogecoin, plummeted 15% to 30%, provoking panic among global investors. This event was quickly dubbed a flash crash, where high-speed, forced liquidations sharply amplify volatility. Analysts drew parallels to the market collapse of March 2020 during COVID, citing the sudden cascade of forced exits and spiraling losses. Tariff shock, the catalyst to the collapse. President Trump ignited the crisis via a post on his Truth Social channel, announcing a 100% tariff on all Chinese-origin goods starting November 1st, along with new export restrictions on critical software. This further intensified tensions in the ongoing U.S.-China trade war. Market watchers had already been nervous. Earlier that morning, Bitcoin was trading around 117,000 and dropped about 3,000 immediately following the announcement. Within hours, it plunged below 110,000, recording a drop exceeding 10% in a single trading day. Ethereum tumbled from over 4,178 to slightly below 3,700. Solana, XRP, and Dogecoin dropped up to 30%. Even relatively stronger assets like ADA, Cardano, and Chainlink fell dramatically, with losses around 40%. Mega bankruptcies, $7 billion vaporized. This abrupt price collapse wreaked havoc across trading platforms. According to CoinGlass, more than $7 billion worth of cryptocurrency positions were liquidated. Many of these were leveraged long positions, automatically liquidated when market angles shifted downward. This in turn triggered further sell-offs. This cascading liquidation forced many investors to offload assets quickly to cover losses, further driving price downwards. Analysts called it a complete leverage reset, wiping out months of risky bets in hours. Trader reactions, pain, panic, and perspective. The crypto community was stunned. Bob Lucas described the crash as COVID-level nukes, calling it one of the worst in recent memory. Ram Aluwalia of Lumia Wealth argued that the tariff announcement combined with an overbought market produced a brutal day. Pinoshi, a popular trader, admitted he and others experienced the greatest pain they'd ever felt in the market, ranking this crash as the third worst flush ever. Zaire Eptikar of Split Capital said the entire altcoin complex was totally eviscerated, with prices of many altcoins dropping to their lowest levels in over a year. Together, traders warned that this crash was a forceful reminder of how vulnerable crypto markets are to geopolitical shocks. Political situation, trade war, and rare earth metals. This instability didn't occur in a vacuum. The crash is rooted in deeper tensions. The U.S.-China trade war had escalated around exports of rare earth metals, critical to tech and defense sectors. The new U.S. tariffs responded to China's increased restrictions on those metals. The administration also introduced export bans on certain software, adding further pressure on the tech and digital asset space. Investors responded by pulling out of high-risk assets like cryptocurrencies and reallocating into safer instruments. Resilience and institutional response. Even after the collapse, Bitcoin showed signs of rebound. By Saturday morning, its price recovered moderately to around $115,000. Even some institutional players saw opportunity. Arkham data revealed that Marathon Digital, one of the world's biggest Bitcoin miners, acquired 400 additional BTC during the crash, a wager of about $45.9 million. This underscores that large investors may still believe in crypto's long-term value, despite turbulence. That said, analysts caution, if Bitcoin fails to maintain above key resistance levels, it could revisit the 100,000 territory. The market remains fragile and sentiment cautious. Comparison to past crashes. Many drew comparison to the March 2020 crash during COVID. Panic sells, lightning liquidations, and rapid reversals all reappeared. Experts suggest that these crashes act as shakeouts, cleansing over-leveraged players and paving the way for more sustainable growth. Yet the financial and psychological damage is profound. Billions lost in hours, investor confidence shaken, and short-term speculative strategies questioned. Altcoins and recovery signs. Altcoins bore the brunt of the damage, but some saw recovery signs over the weekend. Cardano, ADA, and Dogecoin rose by roughly 10 percentage points as capital flowed back in. XRP recorded capital inflows of about $30 billion, reflecting investors' attempts to seize opportunities after the crash. This rebound is tentative. The broader market mood remains cautious. Analysts note that volatility may persist amid geopolitical tensions and shifting risk preferences. Observing fast. Volatility as the new normal. The October 2025 flash crash highlights crypto markets' susceptibility to global processes. With US-China trade tensions escalating, investors may continue to face sharp price swings and uncertainty. Analysts urge caution. Avoid over-leveraging, emphasize fundamental analysis over speculative trades, and recognize that digital assets may remain under pressure during geopolitical volatility. Despite the magnitude of losses, the fact that Bitcoin and some altcoins recovered within 24 hours signals that confidence in crypto's underlying value isn't wholly shaken. Immediate lesson: a tough wake-up call. The crash should serve as a warning. Cryptocurrencies, promising though they are, remain vulnerable to external shocks from politics or trade policy. The $7 billion in forced liquidations and the emotional market response show how fast optimism can turn to panic. Yet, history tells us every crash offers lessons and opportunities. The partial rebound and strong institutional moves hint that faith in digital assets endures. But for now, markets tread carefully, ever aware that a single policy announcement or social media post can trigger upheaval. Thanks for tuning in. This is TECHi. We hope you gained insight into the forces behind this historic market event. Don't forget, tap like, hit subscribe, and ring that bell so TECHi keeps showing up in your feed.